Tonight we're taking a close look at the marijuana boom, or some would say bubble, depending on your perspective. I've told you that we can expect a flood of cannabis companies coming public through various different methods. So let's talk about the next one. That's M Hardeen. Now, this is an interesting story. M Hardeen is a professional management company that partners with cannabis producers and retailers to help them set up shop and run their facilities in the most efficient way possible. It's an intriguing concept, and they're about to become publicly traded via what's known as a reverse takeover in Canada. We'll explore that. Now, M Hardeen also invests in some of these businesses, and they recently spun off GrowForce. That's a Canadian cannabis producer that's still exclusively operated by M Hardeen. Again, I think you need to be very cautious about this entire group. I made that point this morning, but we do need to know more. So let's take a closer look with Rishi Gautam. He's the CEO of GrowForce and the executive chairman of M Hardeen to learn more about these two companies that he's built. Mr. Gautam, welcome to Mad Money. Good to see you.
Good to see you.
Okay, get that right, Gautam. Don't want to mess that up. Okay, why do we need your company? What does it do?
M Hardeen's a management company. We have been managing cannabis facilities since 2009. Our founders were pioneers in this industry, came in for early days in Colorado, set up a management company to operate cannabis facilities, cultivation, extraction, and retail. I came in as an investor in 2014, really institutionalized the business of managing cannabis assets for license owners.
Okay, now I look at your numbers and you're actually making money. Why do you need to come with a reverse takeover with some shell company when I think a lot of people would say, wow, this company's making money. I just want to own shares in it.
So we've gone through the capital markets process for the past year. We really respected the process of how do you take a cannabis company public in North America. The vast majority of the companies are obviously listing in Canada, of which the vast majority are doing it through this reverse merger. So what we did over the last year, we institutionalized the business also on the cap table. 35% of our business is owned by institutions, long-only money. Okay. And what we have done is set up the RTO in a very clean, straightforward fashion. It's our fastest, most efficient way to go public. And we have institutional backers already.
Okay, well, things have gotten crazy. Look, I've been around, you've been around. How do our viewers at home respond? How do you respond to something like a Tilray, where it's obvious that a company that suddenly becomes, say, $24 billion, that was not that much that long ago, starts reeking of the dot-com era? What do we say to people?
I take a step back and I look at what are the actual companies with actual revenue, actual profits, actual substance. And that's M Hardeen. And that's our sister company, GrowForce. We're a business that's built on the most experienced operating team that's been in the legal cannabis space over the long haul, irrespective of stock charts and highs and lows. The substantive business will prevail. That's for any industry, not just cannabis. So I look at the substance.
Okay, so if I want to grow marijuana in a legal state, or I want to operate a store in a legal state, I turn to M Hardeen?
So we have a select partnership group. Depending upon the state, the status of the state, is it medical, is it recreational? M Hardeen comes in as an operator. And we have two business models. We'll come in as a pure agent, operate a facility for a fee, long-term management contract, not too dissimilar from a Marriott flag where you put up and we run everything. And then we also take strategic positions, and we have flagship facilities. So Nevada, we just purchased a flagship facility in Las Vegas. We're looking at Boston. We're looking at certain key markets where we want to have flagship opportunities as well. So it really depends on the market. It's 50 markets in the U.S., not one. Okay. So we base our business model based upon the market. Okay,
so you're executive chairman of one company and CEO of the other. Just for simplicity purposes, why do you have to split them up? It might be great to have all under M Hardeen's roof.
Right, and what we did earlier this year was we spun off a global ex-US brand called GrowForce. Right. GrowForce sits in Canada.
But you're CEO.
Yes, it's a completely separate, independent operating entity. We have a separate board, separate management team. I'm literally the only overlay between both companies. Okay. We wanted to set up a global ex-US footprint because of strategic investors and doing R&D and being able to expand globally. Now, M Hardeen's the manager. M Hardeen manages all of the assets. It's a global management company. Okay. GrowForce is our brand that allows it to expand without touching the states.
Okay, let's talk about legalization in general. What is your feeling about when it's going to happen in the United States? Or is it always just going to be a Canadian phenomenon, October 17? We're going to have to do this piecemeal. We mentioned 50 markets. Is that what it's going to be for the next, let's say, if President Trump's reelected? Okay, I mean, obviously their administration, the president does not favor legalization. So will it be state by state, or is there something that's going to change?
So as a business in the states, we look at every single market. M Hardeen has experience in 13 U.S. states. Okay. We want to be buyers and buy these businesses now, given the fragmentation. We love the fragmentation. We love the irregularity between the federal and the state.
You don't think these have gotten too expensive at that level?
Not yet. The lift really hasn't occurred yet in the States. We have this small window right now to continue to acquire these flagship facilities until the federal side really reconciles with the state.
But is every market good? For instance, I follow the spot markets for cannabis, and in Oregon, it's going through the floor. I'm not so sure all those operators are going to make it.
And it depends on the state. So what we do is we set up vertically integrated management companies. We control everything from the seed to the shelf. So we're really price setters in the market, not price takers. So that again, provides a sustainable business model. Colorado, people have great things to say, people have not so great things to say, but our businesses are profitable that we manage in Colorado because we have the vertically integrated management system.
Okay, so last question. The reverse transaction occurs. What will be there if people do want to buy M Hardeen stock? Just be a regular common stock?
It'll be a regular common stock. So we have a very simple cap structure. There's only one share class. My shares are their shares, and it's a very straightforward approach. The only difference is we're doing the reverse merger, but at the end of the day, it's going to be a ticker, it's going to have shares, and there's not subordinate voting rights.
Only trade in Canada, not in U.S. yet.
There'll be an OTC ticker.
Okay. Fair enough. Thank you so much for all the clarification. We're all trying to get our arms around the situation. That's Rishi Gautam, and he's the executive chairman of M Hardeen, but also the CEO of the other company talked about, GrowForce. Lots of documents you can learn. Caution is necessary. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.